For more than 3 decades, ISIC has helped answer that question by enabling businesses to trade, investors to invest, and economies to grow through effective risk mitigation solutions. The story you're about to watch, it's not merely about numbers, institutions, or transactions. It is a story of confidence, transforming promises into actions, partnerships creating opportunities, and opportunities delivering lasting impact on people's lives. It is a journey across our member states, showing how and when risks are shared and managed effectively to enhance trade flows, investments growth, and prosperity across communities. Please join me in watching a short ISIC's corporate video illustrating ISIC's role in the region.
In a world of uncertainty, the most powerful force in development is not capital alone, it is confidence. ISIC, the Islamic Corporation for the Insurance of Investment and Export Credit, a member of the Islamic Development Bank Group, has provided that confidence for over 3 decades. More than $139 billion in business insured since inception, across member states, across continents, across the markets, sectors, and communities where growth becomes real. With a global footprint spanning Asia, Africa, Europe, and beyond, ISIC continues to expand its reach, enabling trade, supporting investment, and advancing development.
At ISIC, we believe development starts with confidence. When risk is mitigated, trade moves, investment flows, and projects reach the people they are meant to serve. For us, impact is not only measured by the size of transaction. It is measured by the difference those transactions make in people's life.
Tonight we travel a crescent from one edge to the other, from Kazakhstan to Uzbekistan, through Azerbaijan and Turkmenistan, along a path of partnerships, projects, and people whose lives moved forward because the risk was shared and the promise was kept. The crescent begins here in Kazakhstan, the source of $12 billion in cumulative business insured by ISIC. Through its strategic partnership with Kazakh Export, the National Export Credit Agency, ISIC has strengthened insurance capacity and enabled the trade flows linking Kazakhstan with its neighbors. Most notably, this includes the export of locomotives from Kazakhstan to Azerbaijan railways, backed by $25 million in ISIC reinsurance coverage, a flagship example of intra-OIC trade brought to life through risk mitigation.
The partnership between the EC of Kazakhstan and the ISIC has exceeded 11 years, which positions ISIC as our most trusted long-term partner in outgoing reinsurance. A prime example is the project with Lokomotiv Korostorozawod. This case also highlights the support of ISIC in facilitating trade flows between our countries.
Those same locomotives arrived in Azerbaijan, a country at the crossroads of East and West and an emerging hub for trade and investment. ISIC's engagement here extends well beyond a single shipment. Through ASPROMO, ISIC is supporting expert diversification and sustainable investment. Through a memorandum of understanding with the Central Bank of Azerbaijan, it is expanding access to Islamic insurance and helping build the institutional foundations for deeper cooperation. $164 million in cumulative business insured, support that reflects ambition and signals the start of something greater.
Dəmir yolları layihələri yaxşılaşdıqda insanlar
people feel the difference. Journeys become easier and goods move more reliably at that time, and everyday life feels more connected, stable, and full of possibility.
Turkmenistan development is measured in harvests and in the journeys people make each day. ISIC's support for Komatsu agricultural machinery, backed by $40 million in ISIC insurance coverage, has helped strengthen food security and raise rural productivity. Its support for a fleet of Toyota buses, taxis, and minibuses, backed by $20 million in ISIC insurance coverage, has improved public transport and everyday mobility. 63 million US dollars in cumulative business insured. Every dollar becomes a tool in someone's hands or a seat on a bus heading home. The crescent comes to rest in Uzbekistan. With 2.5 billion US dollars in cumulative business insured, marking a significant chapter in this journey. Through the Agrabank Murabaha facility, backed by 195 million euros in ISEEK insurance coverage, Islamic Finance has reached SMEs and retail customers through digital platforms, opening access where it did not exist before.
Aligning our strengths with those of our trusted partners with ISEEK, the positive impact derived from this transaction paves the way for future collaboration in Uzbekistan.
In Bekabad, 133 million euros financing supported by ISEEK is helping strengthen Uzbekistan's steel industry through a new casting and rolling complex, strengthening construction and manufacturing. Through its cooperation with Uzbek Invest, Invest Uzbekistan and Usama, ISEEK also supports the wider progress shaping Uzbekistan's growth and reform.
Thanks to ISEEK support, our new complex in Bekabad means stability and the future for our family. We are building Uzbekistan's self-sufficiency, one steel coil at a time.
This is our mandate to unlock opportunities and transform ambition into lasting development impact. In 2025, that impact was reflected in more than 300,000 jobs sustained, 6,000 SMEs empowered, and USD 900 million in essential goods and services enabled across our member states. Because when risk is mitigated, confidence becomes action and ambition becomes impact.
ISEEK does not build, it does not operate, it stands behind, providing the risk mitigation that unlocks what might otherwise remain beyond reach. That is the work, and it continues. One journey, lasting impact.
On behalf of the Islamic Corporation for the Insurance Investment and Export Credit, ISEEK, it's my great pleasure to welcome you to this special side event of the ISDB Group Private Sector Forum 2026 entitled De-risking Trade and Investment for Regional Prosperity. Our discussion will explore how effective risk mitigation, regional cooperation, and strategic partnerships can unlock greater trade and investment flows, support economic diversification, and contribute to long-term prosperity across our member countries. It's now my pleasure to introduce our distinguished moderator, Mr. Elnour Aliyev, Advisor to the Chairman, the Small and Medium Business Development Agency of the Republic of Azerbaijan, Kobia. Mr. Elnour, the floor is yours.
Already good afternoon. I would like to welcome everybody to our very important session. So in this session, we're going to talk about the risks. I think this is the essential concept for all of us individually in our lives. We are doing the risk management on a daily basis. And now we're going to talk about the professional risk management in a very critical region, which is Central Asia and the Caucasus. So the region has been building the infrastructure since regaining its independence almost more than 30 years ago. And now what we can see that the strategic key milestones are there to facilitate trade and investments. But the region also facing significant challenges, and the biggest challenge that they're facing is their landlocked nature. And even some of them are double landlocked countries. And at the same time, those challenges are offering opportunities for all type of businesses, for investors, and importantly for insurers and those engaged in the export credit financing. And today, so opportunities are there, but opportunities does not necessarily mean that they're tapped. And if you look at the infrastructure, you can compare it with the blood vessels. So countries have built these blood vessels, but we need to provide the blood to flow through these veins. And the bloodstream is definitely a function of the multiple businesses, financing, definitely government involvement, very important regulatory aspects, but definitely the risk managers, insurers play a crucial role in facilitating that blood flow. And today, we will try to answer the very critical question, how we can convert those opportunities into the development opportunities, when the financing will bring about development in the region, when the financing will bring about the regional cooperation, when the regional cooperation in its own turn can create even bigger opportunities for businesses. In this regard, we have a very distinguished panel today, so I would like to invite one by one our panelists. So I would like to invite Dr. Khalid Khalfallah, the CEO of the ISEC. Doctor, can I have you to the podium? ISEC is the insurance arm of the Islamic Development Bank, and it provides political risk and credit risk insurance to the solutions across its member countries. The next speaker, Mr. Yoshiro Akita. Mr. Akita, can I have on the floor? The president of the Bern Union, the global association of the expert credit and investment insurers, whose members collectively support trillions of dollars in international trade and investment each year. The next speaker is Mr. Sujata Sarangi. Can I have you, sir, on the floor? Executive Director of the Standard Chartered Bank, bringing extensive experience in financing trade, infrastructure, investment projects across the emerging markets. And last but not the least, Mr. John Lentine. He is a global head of the Structured Credit and Political Risk Special Risk Group, one of the leading global advisors and arrangers of the political risk and the structured credit insurance solutions. So if you don't mind, I will also take my seat. Now? Yes. Everybody says yes. So I will start with Dr. Khalid. By the way, I happen to also have the very important IDB experience. I worked in the IDB for 9 years, and I was covering the trade financing and the trade financing portfolio specifically in the Central Asia. So this is a very hot topic for me. And a familiar issue, and even I would say something that I was also working on always for 8 years. So regional cooperation is significant in terms of the offering opportunities for infrastructure, energy, and logistics and trade. But definitely investments, what we see that the investments does not match those opportunities in the region, Doctor. So I would appreciate if you can enlighten us in terms of how ISEC can help transform those opportunities into the bankable projects. And if there are any specific examples, we would appreciate that. Thank you.
Thank you, Noor. It's a pleasure to have speakers here on our ISEC session from different industries, from ECAs, from financial institutions, and also from the London market. So maybe by way of introduction, just to highlight key feature of ISEC that make it unique as a multilateral insurer. ISEC is the only multilateral insurer that is Sharia compatible. So we provide our services, be it trade finance, trade export credit, or investment insurance in compliance with Sharia. We are the only multilateral also that is South-South cooperation, which is only for the OIC member countries. Now, when it comes to the regional integration, as part of IDB Group, our mandate and raison d'etre was to support the intra-trade and investment. And that is something we report on an annual basis to the COMSEC of the OIC meetings in terms of as a group collectively, but from ISEC we also report how much business we have supported in inter-OIC, mainly on supporting the regional integration, on the integration at large at OIC. In the opening session, His Excellency the Chairman stated a figure of 139 billion that we have insured since inception. Out of this, almost 57 billion was for intra-OIC. Now, how we do it? Definitely, ISEC and other multilateral cannot satisfy the demand individually. We do collaborate with the national ECAs, specifically in Central Asia. I mean, the example you just have seen in the video on the locomotive, that was a good example of how we supported the Kazakh export to locomotive to Azerbaijan. But more importantly, we work with the industry at large. We work with the global ECAs. In Central Asia in particular, we have been very collaborative, and I appreciate the support we receive from NEXI and expanding jointly our support for critical infrastructure project in the region in Central Asia. We also work with other financing institutions, notably multilaterals like EBRD, Asian Development Bank, specifically for Asia, but in Africa also we work closely with African Development Bank and also with ATD, which is the other multilateral insurer that based in Africa. The way we do it, especially for the traditional regional integration, is mostly focused on the transport sector, be it road, be it railway projects. These are normally a large ticket size transactions, and neither an individual financier or individual insurer will be able to satisfy and provide the cover required. So the only way for us is to work jointly as a syndicate of financier and insurer to support those type of projects. You will typically find a transaction that is having an ECA component, commercial lenders, and a multilateral lenders. And where ISEC comes as value is where we support attracting and mobilizing the commercial lenders. Notably, we do our best to support Islamic finance transaction, because when Islamic finance structure in Islamic finance, ISEC will be provided a full cover for both the principal and the profit. When it's conventional, we exclude the interest. So it's always good for us to structure transaction in Islamic way. And we have been successful with all international banks structuring transaction in Islamic way. So the key is to collaborate with other regional DFIs or regional insurer or export credit agency to support particularly the regional integration type of transaction, especially in energy and in the transport sector. And in the region here, as you have seen in the video, we have very good live examples that was done. We have worked jointly before with NEXI also in Central Asia in transactions. We recently even renewed and expand our memorandum with NEXI to do more of this type of transaction, specifically in the energy sector, renewable energy in Central Asia. So sky is the limit for us to support those type of transactions. And we always work with our dear partners from the financial institutions, from the export credit agency, and from the multilateral development banks. Thank you.
Thank you very much, Dr. Khaled. So maybe it also would be very beneficial to remind that to unlock full potential of the ISEC coverage, the member countries' membership is very important. So I'd like to use this opportunity to invite all non-IDB member countries which hasn't so far joined ISEC to join the ISEC membership.
True. I think what is special about this annual meeting now held in Baku, we have been successful to complete our membership in Central Asia. During our BOG meeting on the 19th, the Republic of Tajikistan and Kyrgyz Republic will be formally accepted as a member of ISEC, and that complete our membership in Central Asia.
Congratulations. I didn't know that, so I was just trying to promote the membership, but apparently it's done already. Now the full Central Asia is under ISEC coverage, right? Yes. I think the first day of such a coverage, or it's enacted already, right? So in force, no? The membership. It's formalized, or?
It's almost done, but as formality, normally it's done after the BOG final endorsement, but it's just a formal procedure. And we look forward to
support both Kyrgyz and Tajikistan with our services.
Inshallah, alhamdulillah. So this is historical annual meeting for Kyrgyzstan and Tajikistan. Thank you very much. Akita-san, the partnerships are extremely important in today's risk landscape. I would appreciate if you can share with some of your experience of your cooperation between ISDB Group and including the ISEC definitely, and explain us how such cooperation can contribute to economic development of the individual countries. Thank you.
Thank you very much. And first of all, thank you for your invitation to this distinguished panel. I have two hats. One is a Japanese export credit agency called NEXI, and also the president of the Bahrain Union Industry Association. Now this time I'd like to share how our partnership has been developed with ISEC and ISDB Group. Now, together with ISEC, actually we have built a quite solid track record. We have multiple the transactions in the field of energy, particularly gas-fired energy transactions in the multiple member countries. And we are also advancing the energy transition. Last year, together with ISDB Bank, actually we supported one first joint renewable energy project in Central Asia that was in Uzbekistan, a solar and battery storage project developed with Aqua Power and Japanese sponsors. This includes 1,000 megawatt of solar capacity and 1,336 megawatt hour of battery storage, making it one of the largest projects of this kind. These examples, actually, I think we can highlight two key messages from NEXI point of view. First, we take a very much pragmatic approach in terms of energy transitions. We recognize the importance of role of gas as a transition fuel, while also accelerating renewable investment. So tailored to each country's specific circumstances is really critical in terms of energy transition globally. The second, the partnership, is really essential. Japanese companies are investing alongside OIC investors such as Aqua Power in projects that support long-term sustainable growth. So NEXI, through political risk insurance and co-financing with ISDB, and also reinsurance or co-insurance arrangement or ISEC, so we can support those mobilizing private capital in the member countries. In this way, our cooperation actually goes beyond support for individual projects involving only Japanese companies, but also contributes to regional integration and prosperity, infrastructure development, and broader economic growth of the ISD member countries. Thank you.
Thank you very much. Very interesting. I think that overall, across all countries in the region, we can see, as I was saying earlier, huge developments, and both in terms of the infrastructure, but maybe more important in terms of the regulatory transparency and even more sophisticated court systems. I think this will significantly facilitate future interventions in terms of post-financing and expanding the insurance coverage for ongoing projects. Thank you very much. Mr. Sarangi, from your perspective, you are representing the export credit agency business in general. Okay. And from your perspective, how the financial institutions, export credit agencies, and investors collaborate together to overcome risk barriers and the perceived risks in the region. Thank you very much.
Thank you. And just thanks again, if I could say, for inviting Standard Chartered Bank onto the panel. I think we have had a long relationship and partnership with ISEC, and we have done several transactions with them. So to answer your question, right, and I guess we all know the role which ISEC plays, I think everybody is aware, all the member countries, all the important infrastructure projects which ISEC does. I guess what we need to do now is to push the envelope more and try and innovate more from the plain vanilla things which we are doing. So we do very well. For instance, we have done in Senegal, in Côte d'Ivoire, number of infrastructure projects using the non-honoring sovereign obligations, and we do that. But I think now we need to, as commercial lenders and banks are doing more, we are using up our capacity to do ISEC. And that's where I think the evolution needs to be. So, for instance, some examples of what I mean. We had a transaction in Iraq, right, where, of course, Iraq is a member country for ISEC, and ISEC very much has to be on the table as an important partner. But ISEC was able to put its pride aside and say, okay, we will be a reinsurer, because that was the need of the hour, and that was, I hugely applaud ISEC for doing that, because that enabled us to do that transaction, because the parliament had approved certain terms and conditions there, and we had to do that. So that is one instance of what ISEC was able to achieve, and as a reinsurers to that. Now, second, on the same theme, we had a transaction in Côte d'Ivoire where AFDB was the primary guarantor and ISEC came in. Now, that's a great example of how ISEC was able to unlock capacity for AFDB to do a $500 million transaction in Côte d'Ivoire. So I think these are all instances. So we need to be doing more of those, right? So that the member countries and the borrowers, the sovereigns, can benefit with longer tenor and very competitively priced transactions. Third of this, right? So apart from the reinsurance, I think to be able to do the institutional investor distribution, because now we are seeing banks have done so much. There is only so much of liquidity, and now we need to bring in the pension funds. We need to bring in the other liquidity pools which are available, and ISEC has done a fantastic job again on that to be able to do these structures, and they are really at the forefront. So we need to be thinking of more of these structures, so reinsurance with multilateral development banks collaborating with the ECAs, because you see this is the big difference between an ECA and ISEC, because every country also wants to promote its own contractors. They don't just want to do with an OECD contract. Ugandan corporate, they want the Uganda corporate to develop, and ISEC comes in and says, yes, we would be able to support, and provides the, the cover so that commercial banks can do the transactions. So these are some of the things we need to see more of, and I think, and which is already happening, but we just need to take it to the next level. Thanks.
Thank you very much. I think that's the advantage of ISEC. Their better knowledge of the countries, that special type of relationship with the governments gives huge confidence to all players within the ecosystem, and I think that a very unique position for ISEC within the region, at least in the IDB constituencies. Thank you very much. And the next question is for Mr. Lentine. You work both with the multilateral institutions like ISEC and the private insurance market on the same transactions. In your experience, when does the combination actually work? What are the factors leading to the success of transaction? Thank you very much in advance.
Thank you. Does this work? Yeah. Thank you very much. Again, a great pleasure to be here. So I lead a team of brokers, and we, as a specialist insurance broker, we sit at the intersection of public and private de-risking, working with institutions like ISEC, the World Bank Group, and Daman, amongst others, alongside commercial lenders and private lenders, and helping to de-risk with private insurers. So, and we support about $25 billion of insured assets, just to give an idea, and most of that is in emerging and developing economies, including Africa, the Middle East, and of course, Asia and Central Asia. To your question, when does ISEC work best with private insurers? I would say when it works, it really works. I mean, it's almost worth taking a step back and thinking about what's going on here, and particularly in the context of financing. ISEC is, in a financing context, an unfunded guarantor, but with a development mandate. And what ISIC does incredibly well is mobilize private reinsurance companies who obviously don't primarily think through a development lens. I mean, they're interested in development, but it's not their prime motivator. So the combination of ISIC and private reinsurance, you might consider on a transaction the risk spread. And then what you need to bring in, Sujitev helps, of course, banks like Standard Chartered Bank provide the funding. And where these deals work really well is where the combination of the risk spread and the funding spread is lower and often significantly lower than the alternatives, especially, for example, the capital markets. Now, it doesn't always work. And I think at the moment, you know, in the world we live in, we have to be honest that risk is certainly a factor. And, you know, regionally, we've seen the war in the Middle East recently, and private insurers who write war risk insurance this year alone are looking at 400% loss ratios. And that's one reason why companies in the Gulf region are complaining about the cost of insurance, because, you know, it's really hit the balance sheet of insurers. So risk is absolutely a factor. And I think war, climate, and sovereign default risk are factors that ISIC can mitigate to some degree, but ultimately private insurers at a certain point will lose appetite. And sadly, that's true across much of the Sahel today, certain countries in the Arab world like Syria and Sudan. I mean, obviously there is positive outlook in Syria, but it is very, very difficult to get business done. And Libya, again, protracted difficulties arising from conflict. So those are the challenges. So risk and capacity is another challenge, I would say. So again, in certain countries, the private insurers are just full, and that's actually, ironically, often a marker of success. That isn't such a problem in Central Asia. It's been a problem for countries like Ivory Coast. Uzbekistan, if it isn't careful, is at risk of being a victim of its own success, because people have been doing huge amounts of business in Uzbekistan. And then capital allocation is another factor for insurers as well, and also for public insurers like Nexi. What we're seeing a lot of that works increasingly well is blended finance, and how transformative that can be. ISIC, of course, can anchor a deal. So ISIC bringing its credibility, its credit rating, its preferred creditor status, its OIC member state relationships, and the governance discipline and professionalism that ISIC applies to its underwriting, all of that brings huge confidence to private reinsurance. And that's the reason that ISIC can underwrite deals of hundreds of millions of dollars of guarantees that, if it was entirely on their own balance sheet, wouldn't be feasible for them to maintain the very robust AA rating that they have. So a combination of ISIC and reinsurance becomes essential. And then with ISIC as the anchor and then the private market behind, you get, I would say, a complementary transaction. It's not really competition. ISIC's the anchor of the sovereign relationship, and private insurers can move when they like a deal with a lot of speed, and they can bring huge capacity behind deals. The other thing that ISIC does incredibly successfully is extends tenors on transactions. So that allows sovereign obligors, sub-sovereign obligors, and private obligors to borrow for longer. So longer and less, really. And that is working directly. Central Asian credits that become insurable significantly because of ISIC's involvement. And that signals institutional confidence in the jurisdiction and the borrower. And just a final note on what's really working and what we're seeing a lot more of is blended finance. That's increasingly important, and it's a phrase that's bandied around a lot, but what that might mean specifically, and we've worked with ISIC on some evolution in this space in recent years, is using, let's say, a AAA institution, such as the African Development Bank, to sit in a first loss on a loan, and then you take ISIC to sit in second loss alongside private reinsurance, and that can unlock billions of capacity, capital, unfunded capital, of course, on the insurance side with ISIC, and then funding at significantly lower and longer costs. And to Sujitev's point, another innovation that ISIC's been at the forefront of is allowing for deals to be repackaged and sold to institutional investors, including, interestingly, pension funds in Japan, for example, who are able to take risk in the Central Asian region or in the African region that they simply wouldn't be able to do if it wasn't for the involvement of ISIC. So absolutely there are challenges, but I think when ISIC works at its best, it is an incredible institution at crowding in huge volumes. And I think testament to how much ISIC has grown, and again, Dr. Khalid will speak better to this, but I think ISIC has probably tell me if I'm wrong, doubled the size of your guarantee portfolio over the last 5 to 7 years. And it's probably $15 billion plus these days of live guarantees, so highly effective.
Thank you very much. In fact, there's a huge opportunities, I believe, for ISINC intervention, and there's a huge opportunities in the region, even in our region. But even for what I have seen from my own personal experience that the many corporates are aware of the potential cooperation opportunities with ISIC. I think this is a very important issue that needs to be addressed. Overall, even the insurance business has been away from this region for many years. And this is something new, specifically for new corporates, which are on the way of establishment, but they still can be eligible for the ISIC financing. So Dr. Khalid, from your perspective, if we talk about our region, what are the most promising sectors for potential ISIC support? And what are the sectors that you expect a stronger demand from investors, and what are the aspirations of the member countries? I would appreciate if you can elaborate on this.
Thank you. Just to touch on earlier comment by executives that we need to push the envelope. I think in Central Asia, with all the positive aspect mentioned by John on ISIC, we need to push the envelope in Central Asia in areas that has not been maybe explored. Just to give an example, I think in the region here, Aqua Power and Masdar are quite active in Central Asia. But definitely our services as ISAC could be of help to mobilize liquidity from the GCC in sector that we believe they are very promising. Historically, the GCC financiers are not being active in the Central Asia. Just to give an example on the context of Africa, recently, last year, we helped to attract a UAE financier to support a huge road project in Nigeria, almost 1.2 billion. And those are the type of things we could explore, definitely with the support of the market, as ECAs, and also the option of the blended finance, first loss, second loss, probably with maybe Asian Development Bank, similar to what we did with African Development Bank. Now, certain sectors are promising. We started gradually as ISAC to intervene in Central Asia, the telecommunication and ICT in general. I think it's a promising sector. Infrastructure projects, notably renewable energy, there have been quite a lot in heavy fuel and gas fuel, but I think globally with the trend of exploring renewable energy and other sources of energy, I think renewable energy is a promising sector. And definitely with the connectivity, the traditional infrastructure, transport sector is also very important. Not only the roads, but also I think the railways. Most of the countries are landlocked, and the only way to have access to the market is to have strengthening the network and connectivity through transport, be it road, be it railways projects. So I would think these are the good sectors to explore, push the envelope, mobilize through our services, probably liquidity and investment from the Middle East to the Central Asia. Notably now, we'll explore this with our new membership of Kyrgyz Republic and Tajikistan to explore opportunities. Certain countries have went ahead, especially in energy sector. Uzbekistan, Turkmenistan, as mentioned earlier, have done quite well, but I think there are other opportunities for us to explore, and we see this a promising sector for us to work jointly with our partners in the industry to support our member countries in this regard. Thank you.
Thank you very much, Dr. Khalid. And I would also, again, from my past experience, like to add maybe the region is an important agricultural commodity exporter, but they have very severe repercussions of the climate change within the region. For example, Kazakhstan is a very important wheat exporter. So, for example, crop insurance. At that time, we were trying to look for different opportunities. Even for Kyrgyzstan, there are some important agricultural, say the commodities, quasi-commodities can also be insured. So maybe the crop insurance can also be very important, prospectively interesting field. Akita-san, you have just recently convened very important meeting of your members in Astana. So would appreciate if you can share with us the priorities and opportunities that emerge from those discussions, and what lessons may be relevant for countries seeking to position themselves as a regional connectivity hubs.
So let me first introduce about the Bearing Union. The Bearing Union is the global association of export credit and investment insurance communities. ISEC is one of the very active members. The 90 institutions across 70 countries actually joining in that association. The association is basically, the purpose is the practitioners' information exchange or best practice exchanges, also to understanding the specific risks. So this time we had the spring meeting in Astana last month. And also, I think I also like to share, because some blended finance is also discussed in this panel. Blended finance is something the Bearing Union also now promote and facilitate. And clearly the MDB members like ISEC or MIGA, those are very critical partners. Now, the last year, the Bearing Union members, so 90 members, actually financed around $110 billion for emerging and developing economies. So just 1 year. So I mean, 10 years are clearly over the trillions. So I can say it's something, the Bearing Union members' potentiality is so huge for the emerging and developing economies, for their economic development and the prosperity. We had a spring meeting in Astana. I thought this is a really right timing and the right place. The geopolitical risk is increasing, and however, we can learn from the history. The Astana and the Central Asia region is actually the crossroads of the civilization and the long history. And now it's another, refocusing because of the geopolitical importance, energy abundant, including critical minerals. So, and also economic growth. Its population is young, so it's really a lot of potentials. So I thought that we had a meeting at the Astana and discussed about the challenges and opportunities in this region. The challenges are clearly that everyone talks about the land-blocked region, so connectivity is a really key challenge. Without that, actually, it's difficult to actually start the businesses or the projects. However, at the same time, in the meeting, we also shared some views in terms of the more importance overall political policy and fiscal environment improvement. Those are to attract the more investors in the region is really critical. And clearly, if we do the big infrastructure projects, we need something like PPP framework, and those type of the policy development is necessary. But the one thing from the Bearing Union members' point of view, because we are the practitioners, so we are working on the downstream real transactions. So I think it is very important for the policymakers to really actually provide the bankable, investable framework. So in that sense, I think we need something, the gap between upstream policy discussions and downstream practitioners' views. I think Bearing Union is a perfect platform to bridge in the gap. And then the particularly like ISEC knows much better than all other ECAs because the country-government relationship is so strong. I think the ISEC role in the Bering Union, those type of discussion is really critical. And that we are very fortunate that Dr. Khalid actually came over to Astana to share his insight and experiences in these regions. So I think this type of contributions of ISEC is really would like to see more. And that definitely Bering Union can actually support for, through this platform, the long-term economic development in these regions. Thank you very much.
Thank you very much. Maybe I would come up with one clarification point. Bering Union, do you have any standing platform for consultations with the governments, or how is it happening?
Okay, so Bering Union itself is actually comprised of 70 ECAs and also almost 20 the private insurers, and plus ISEC, MIGA, ATIDI, those are multilaterals. So naturally, it's a kind of public-private forum. So we don't establish any specific discussion forum. Our members meeting itself already show the public-private partnership forum. So I think this is it's a quite working on. And then we also have some technical the sessions, particularly in terms of legal issues or those type of things. Practitioners gather discussing those type of challenges in terms of PPP framework. So I think the Bering Union is now offering those type of the specific discussion topics, the forum. I don't know, I think we can do more, maybe the regional focus, potentially, but a regional, not only, maybe the Central Asia is really attracted a lot right now, Kazakhstan, Uzbekistan, and Turkmenistan, Azerbaijan. So I think it could be we can think about more something special sessions for.
Why I'm saying that, because for landlocked countries, regional cooperation and even integration is much more crucial, for example, than for the littoral states, because their individual success of reaching the overseas market maybe will not that be easy to tap, but if they taken together and if they cooperate together, specifically for Central Asia, that can help facilitate a lot. So maybe the regional approach also can be considered. Thank you very much. Mr. Sardanji, many projects have access to the financing and the risk mitigation tools, but not all of them reach financial close. How can risk mitigation instruments be structured to support both sovereign-backed and the private sector initiatives? That's the first part of the question. And what distinguishes projects that successfully attract the private capital from those that remain in the pipeline? I would appreciate that.
No, thanks for that. So in terms of what are the success factors for any transaction, I would like to take everybody through the transaction life cycle in itself. So at the start of any transaction life cycle, it is the EPC, it is the contractor who's discussing a transaction with the local authorities. So that is the trigger point, that is the starting point. So at that stage, we are of course dependent on that particular EPC and the contractor. So it is very important that that EPC has got experience, he understands what he's doing, because there have been so many instances where there are some projects which come to us, for instance, which are like $12 billion in some country where the GDP probably cannot support it as well. And they come to us as priority projects, important projects, or is an EPC who doesn't at all have experience of it, or it requires somebody boring, the rail tracks through a hill, and we know the ENS challenges which can come. So I think at the first stage, at the origination stage, it is always the EPC, the contractor, who has got the relevant experience, who has got the strength to be able to find its way through the local authorities and make it a priority for everybody. So at that, I think the second, I would think, would be when it comes to the bank and the bank is trying to structure the transaction at that stage, right? I haven't come to the final, which would be the thing. But here again, a bank to be able to decide how to structure it. So who to use, because there are horses for courses. You know, for some transactions, you will have the ECA as the anchor. For some transactions, multilaterals like the ISEC. For some transactions, it could be the AFDB. So how you decide who to use as the anchor ECA to be able to then bring in reinsurance, to be able to bring in other ECs, to be able to structure at the right pricing. So the bank involved, the liquidity provider, and third, of course, as I said, the anchor ECA, right? So who is able to then bring in? So we have, you know, transactions, important infrastructure projects where we have got an anchor ECA who probably doesn't have the appetite. And then you have to supplement that tranche with other tranches. So it's very important at this stage. So that probably answers, you know, so it depends, it's on the player at the transaction life cycle. Now, what is it which differentiates? So I think if we have these three players, the EPCs, the banks, and the ECAs, the right choices being made, I think that definitely will differentiate whether a project becomes a success or it remains in the pipeline.
Yes, thank you very much. And Mr. Antan, the next question is, so you've been saying that the Central Asian portfolio has been growing over the recent years. From your perspective, what are the key driving factors that led to this success, and what are the examples that can be applied here, for example, in Azerbaijan as well?
Thank you very much. I mean, I think it's true that Central Asia is a hot region at the moment, and the good news is that the private insurance market, risk takers who sit behind institutions like ISIC, reward liberalizing reform very quickly, and Central Asia is literally a proof of that. So if you take Uzbekistan, for example, post-liberalization, just for the book of business that we help with, we had very little exposure, and now we have live exposure across banking, industrial, mining, sovereign and renewables. And that didn't take a decade to happen. It followed reform momentum within literally a couple of years. And actually, interestingly, last week, 2 private insurers flagged to me that Uzbekistan now sits within their top 10 global exposures. And that's the reform dividend made tangible, because that certainly wouldn't have been the case pre the reform in Uzbekistan. Kazakhstan has actually followed a very similar trajectory, and I'm sure you're nodding as well, Akita-san, because you'll have seen the same. And we've got exposure on top development bank in Kazakhstan, agricultural lenders, solar, PRI, all of that kind of business can get done. Kyrgyzstan and Tajikistan are further behind, but engagement is growing, and particularly in Kyrgyzstan with the World Bank Group involvement in a big hydro project there. So what could Azerbaijan do? I think to Akita-san's point, transaction preparation is incredibly important. Deals tend to stall not fundamentally on country risk appetite. It's more about documentation. So getting those technical reports ready, clearing security, getting your offtake clear if it's an offtake project. And of course, if there's an institution like ISIC involved, that brings confidence, and the quality of ISIC's underwriting papers really helps. I think SOE and sovereign transparency is really important. Risk takers can't make assessments if they can't analyze properly. So audited financials, disclosed governance, a credit rating is really important, and a national development strategy. A very obvious point is creditor enforcement confidence. You know, risk takers don't just price on the chance of things going wrong, but on what the chances are that they can recover if they do go wrong. So that's arbitration frameworks, the enforceability of security, and actually specifically in Azerbaijan, the legal reform trajectory in country is, I think, very, very important and shouldn't be underestimated. I think one thing a sovereign can do is communicate clearly on strategy on pipeline, and not all countries do this actually. But a credible sovereign pipeline signals a commitment to reform and creates appetite. And actually, increasingly governments are coming to London, which is where I'm based, and talking to the private insurance market. That makes sense, I think, because private insurers ultimately are large takers, unfunded investors in their countries. Now, just ending on Azerbaijan, Azerbaijan has very strong macro fundamentals, stronger perhaps than a lot of OIC markets at a comparable stage of development. There's the middle corridor, SoCal Green, SGC, the SEZ framework, and the private insurance market is watching. So I think everything is in place. If the reform momentum is kept up, then transactions and investments and trade will continue to flow.
Thank you very much. I think that as we all agree, the regulatory framework, transparency of the regulatory framework, and the level of the development of the financial system within an individual country, in addition to the natural resources, in addition to the infrastructure that has been built already, is very important, and also the important that the economic operators within those countries, they are well informed of the opportunities for growth, for business growth, because this understanding will help them to build better corporate governance, to build much more transparent corporations with proper audited financials, because sometimes when you ask for audited financials, they say, well, I have to pay that much, what will it give it to me? So there should be a very clear picture in the mind of each business owner or the CEO, executive CEO, that there is a clear benefits of running the business as transparent as possible.
I mean, how many SOEs have we seen where you say, can we have audited financials, and they're 3 years out of date? I mean, what kind of message does that put across?
This is also some type of the shift in the mind, which can also explained by the recent history. So as we develop, the more transparency is required. So I would like to conclude our question session with the third round, with single question to all of our panelists. I would appreciate if you can cover that question. If you could identify one action that would accelerate cross-border investments in emerging markets, what would it be? Dr. Khaled, I will start from you.
Thank you. I think it will just follow on what you and John were saying about availability of information. I think enhancement of credit information, reliable credit information, is very key. The good news, collectively as ISDB Group now, we are embarking on a new corporate strategy for the next 5 years, and we want to work as a group members, ISEC, ICD, ITFC, and the bank, in a coordinated manner and deliver as one group. So there will be opportunity to support countries in the region in terms of capacity building, notably probably from IDB, in those areas where we will help enhance the business environment. The key requirements is definitely credit information, and that will open doors for us as insurer, but open door also for the financiers to come collectively and support our member countries.
Thank you, Dr. Khaled.
Yes, so the investment to emerging countries, the partnership is the key. That no one can actually invest alone. So if the risks are shared or the deal doesn't exist, those type of situation we are facing, we need trusted partner. For us, ISEC is a very trusted partner, and I think NEXI and ISEC also has to be trusted partner for private investors. Not only ISEC NEXI, but all the Barron Union members. And I think this is something, if the partnership exists, the more project would be move faster, and this type of partnership will accelerate the investment toward the Central Asia region. Thank you.
Thank you very much.
Yeah. The most important development that we have seen in this market is more and more guarantee products coming in from various MDBs. So the evolution of that, to be able to tap those, remains key. And it's important that these guarantee products, as they are coming in, are Basel compliant. It gives the capital, relief to the banks to be able to do more. So I think a continued upward trajectory on these credit risk mitigant tools, I think, holds key to be able to unlock infrastructure in the emerging markets.
Thank you very much. And John?
Thank you. I mean, I would echo everything, the importance of guarantees, the critical importance of partnership, obviously the critical importance of anchor multilaterals like ISIC. I think at the sovereign level, transparency can't be underemphasized, and frankly, there's a need for just technocratic competence. I think we've all seen countries that have actually been positively transformed just by technocratic competence. So that shouldn't be underestimated. And I guess perhaps it's a little political, but I think there's something in what Mark Carney said recently that, there are many countries in the middle region, and a lot of trade is being shut down and barriers are being put up to trade. And frankly, if I was not in a superpower, open your borders and liberalize, actually, because there are two choices. And I think open borders and technocratic competence and transparency is probably the way forward, as opposed to erecting trade barriers and trying to retreat behind a wall.
Thank you very much. Thank you all for very important recommendations. At this stage, I would like to open floor for the Q&A session. If there are any questions, any clarification points from the audience. Yes, please. Gentleman in the middle row. Yes, we do.
I'm Muzaffar from Uzbekistan. Islamic Development Bank Group has been in cooperation with Uzbekistan for many years, and specifically ITFC and ICD have Murabah alliance with our commercial banks in Uzbekistan. So one of the problems, though, is those corporations request guarantees. Thank you. The ICD and ITFC request guarantees from Uzbekistan local banks for their Murabah alliance. And usually local banks tend to get charged for a guarantee. And according to Islamic commercial jurisprudence, this is, tabarruat, and it's not acceptable to get any commission for this kind of guarantees. So considering the work of ISEC and your work, is it possible to facilitate this kind of guarantees or any other the risk mitigation tools instead of paid guarantees in the work of ICD, ITFC? Thank you.
Thank you, Muzaffar, for the question. Yes, traditionally, I can speak also on behalf of ICD as acting CEO of ICD. That used to be the practice, but recently we start as part of our new corporate strategy to work collectively as one group by bringing ISEC to provide that credit enhancement to the intermediary bank. So that's an approach we're going to continue. Hopefully, we had one transaction now we're currently working in Uzbekistan, and this will be the approach we'll be adopting. So you'll bring ISEC to provide and ensure the performance of the intermediary bank, so intermediary bank can easily make an affordable line to the SME. So we are going in that direction, and hopefully we'll be able to conclude some deals in Uzbekistan and also in the region. Thank you.
Any other questions from the audience? Yes, please.
Thank you. I think on the capitalization, we started in 2022. We had our approval by the Board of Governors for our share capital increase. We work with some banks, central banks in our member countries to have zero-weighted risk. We have been successful before in Bahrain. We also try to explore the same approach with Morocco, which we have approached them recently, so that we have, now we could have 20, as you rightly mentioned, but potentially if we get zero risk-weighted, that will definitely help us. Of course, enhancing the rating, it requires time because it's a trend. So we are now AA rated, and it will take us a time to potentially reach a AAA rated. But we are working on that direction.
Thank you very much, Dr. Khalid. Any other comments, questions? Yes, please, on the left side. No, microphone is coming.
Thank you. Alessandro Viviani from the European House on Prosetti. So we are assisting several clients, even investors, in finding investment opportunities. And to our experience, especially in a sector like water, like renewables, several funds in Europe have like OECD only limitation in their scope of investments. And even if there are opportunities with AAA absence of risk, there is a clear wall in assessing in their own governance structure in other countries' opportunities. And my question is how to increase the capacity to cooperate with already established investment funds, especially in infrastructure sector, and trying to create a more cooperation with other investment opportunities in Islamic countries. Thank you.
Who will take up the, Dr. Khalid? You?
I think one way it's we work directly, so we could approach us directly as ISEC and IDB group because we had regional presence in different regions. We have an office in Central Asia in Almaty, for example, and then we have also in Indonesia. So we're quite spread geographically because we can't do everything from our headquarters in Jeddah in Saudi Arabia. The other way, we also, as IDB, not necessarily as ISEC, we work very closely with all the investment promotion agency. If you see, we have as promo here in Azerbaijan, and that's the way we can also through that challenge connect you with the right local partners.
Any further questions? No. I can't see any. Maybe I would like to have one question. Maybe this is this is regarding the corporate financing in the region. In many cases, me personally, I've witnessed very weak balance sheets within the corporates, but with the real businesses, with the real businesses, with the real off-takers, ongoing business. So one of the solutions that we have been trying to implement at that time was what we call supply chain financing, mostly relying, for example, on the warehouse receipt financing type of instruments. And this mostly applied for the commodities, again, which is abundant in the region. So does it fall under your field of interest, or are you working on this? And anybody can take up this question. Because there are huge opportunities. Again, if we talk commodities, we talk about a significant amount of the financing and the turnover. Again, wheat, can be cotton, can be different type of the quasi-commodities, oil, fuel, because what we can see, there is a lot of trade passing the region, not necessarily intra-regional trade, but the trade passing the region specifically for the petroleum products, like countries like Tajikistan, Kyrgyzstan, they are net importers of the many commodities. But many importers within that countries, they have running businesses, but sometimes they lack financial resources, and normal, as I said, due to the weak balance sheet issues, they fail to attract investments. I'm talking about the amounts exceeding 20, 30 million USD.
So, no, thanks. That's an excellent question right now, in which we get asked often, like how would commercial banks support somebody with a weak balance sheet? And maybe I would look to ISEC or any other entity to come. But for the trade transactions you mentioned, banks are of course able to provide trade financing support, and more so because now there are new products which are coming in, and I'm sure ISEC is working as well. There is, just to note, MEGA Trade, they support trade finance, which is a one-year loan, which is something new which they have come up with. And I think it has gained in popularity, though for a commercial bank to be able to lend to a borrower with a weak balance sheet is, of course, I think, it's difficult, right? It's a challenge. Right?
But the idea was financing the companies based on the asset collateralization. For example, I mean, there are many examples of it, even hazelnuts.
Yeah, of course, yeah. That is, of course, doable, right? With the commodity, with the asset-backed financing. Yes, of course, that can be looked at, but then the banks will, of course, have to take a view on that asset, and with the commodity price fluctuation, and whether there is sufficient risk which they are taking, right? So that's something which the credit committees and the banks will have to decide based on that particular transaction. It will be very difficult to give a answer which kind of...
Because what we have seen back at that time, many corporates, they were ready to pay 40% down payment. Just for example, to enable, because you only have one harvest in most of those countries. So and whatever you are selling within the marketing year, you are selling whatever you bought within 2-3 months. And for example, if they can afford to buy something for 5 million, so with the support of the financial institution, they can acquire 15 million. They do 30% down payment. So this is how they were offering at that time to mitigate the fluctuation risk, the price fluctuation risk. So that's what I was talking about. This is more like warehouse receipt type of financing. When the borrower is doing 30%, 35% down payment, that's basically very rarely commodities, specifically agricultural commodities, fluctuate that much within a marketing year. So there's a huge opportunities on this because the trade is going on. There's a real trade. There are real off-takers. For example, even in Azerbaijan, they're very important hazelnut exporters. And the big companies like Rocher, Italian chocolate producers, they have agreements with them. They're buying on an annual basis. But the capacity to sell within the marketing year depends on the price that they're buying at the harvest time. This is
an invitation for Sejatif to push the envelope because he was trying to push the envelope earlier.
No. So no, you are absolutely correct. Maybe perhaps addressed to the wrong person because I look at infrastructure financing and not commodity financing. But I'm sure commodity financing is a very exciting space. I don't know, John, if there's anything you'd like to add.
Maybe John can add something as a broker.
I mean, the private insurance market has financed commodities for as long as I can remember. But I think that the specific challenge you're pointing at is doing it for private corporates with weak balance sheets. Private insurers, probably, I can't speak for ISEC, but it's very hard to take risk on an entity where the balance sheet is just fundamentally weak. Of course, you're talking about a collateralized structure. Perhaps the way to do things like this is to do it with support from the sovereign. So create, using national development institutions to boost the program, to do it programmatically and systematically rather than on an individual transaction basis, because small individual corporate risk is just very hard for private underwriters and probably ISEC to look at, just given these institutions generally are much more focused on bigger ticket, longer term transactions, so short and small and weak balance sheets is quite hard to look at. So I think if that's a challenge that the sovereign wants to overcome, they need to think about how they can walk the institutions like ISEC to the door. I'm sure there's a conversation that could be had with Dr. Khalid and his team, but I imagine they would need some support.
Thank you very much. But that would have huge development impact, definitely, within the region. Thank you very much. So before closing the session, I would like to pass the floor for Dr. Khalid to conclude, and I would like to ask Dr. Khalid to give a message to all stakeholders within that ecosystem what ISIC can do for the region, for the sake of region, what instruments are there, and maybe plans for the future.
Thank you, Elnor. I'll start maybe by thanking our esteemed panelists for joining ISEC session, Akita-san, Figatif, and John. And I would like to extend the invitation to the business community in Azerbaijan to make available and avail our services. We have a stand in the exhibition. We can introduce our products and services to the Azerbaijan business community, but also to the wider business community attending the annual meeting. So this is an invitation to explore opportunities available by ISEC, by also ICD, by ITFC. We all have a stand in the exhibition. And potentially we can also look for opportunities and push the envelope beyond the traditional business we do in the Central Asia region. Thank you all for your attendance, and we appreciate your ample moderating leadership.
I hope I served the purpose. Thank you very much. I would like to ask you to join our panelists. Thank you very much. Thank you very much. Anything else?
Thank you, Mr. Elnor, and sincere thanks to all our distinguished panelists for sharing their valuable perspective and practical insights. We kindly ask you to remain on stage for a group photo. Thank you. I would like to ask His Excellency Dr. Khalid Khalafallah, CEO of ISEC, to present appreciation trophies to our distinguished speakers. Mr. Elnor. Thank you all for joining today's session. John Ali, the floor is yours.